So, Mitul, we continue to see the sustained weakness in the US dollar. How much more further upside do you see in these Asian EM? I know that you've been taking a look at the baht in particular.
Yes, that's right. Good morning. I think there is certainly more upside in the medium term, and we are constructive on Asian assets in the months ahead. And certainly, we think 2021 will be a very good year for capital inflows. Asia's been first in, first out of the COVID crisis, and exports have been particularly resilient in the region. So there's certainly a lot of underlying pressures, especially given the improvement in external positions. But as you mentioned, I'm a little bit cautious in the short term. I think some of the currencies have moved significantly. We are approaching key technical levels here. Plus, and this is quite important, central banks in the region are becoming more resistant to gains. We had, for example, the Bank of Korea yesterday highlighting warnings about the strength of the Korean won. We've had similar concerns about the Thai baht, and also, we've had recent measures in China, for example, for the Chinese yuan in terms of removing the reserve requirement on forward transactions, etc. So these will add up to perhaps concerns about the pace rather than the direction of the moves in Asian currencies.
So what is the risk then of dollar strength that you see?
Well, I think, look, my concern here is that much of the market is negative, the dollar, very bearish into next year. Not just against yen, but against G10 in particular. And we know, of course, now the dollar's languishing, DXY, for instance, languishing at multi-month lows. There is a risk that perhaps the outlook is not as negative. Certainly into year-end, we think there are some risks because our short-term valuation measures would suggest the dollar's oversold at present, and positioning also looks quite negative. So we could see a bit of a bounce in the dollar into year-end, especially if we hold some of these key levels, for example, on the dollar index just below 92. But next year we are, again, I suppose, alongside the rest of the consensus there, we still think the dollar will weaken. But I think where we differ here is we do think there could be a bounce into year-end. And even next year, if U.S. assets really do outperform, the U.S. growth story starts to look a lot better, there's a reason to perhaps be a little bit more optimistic on the dollar next year.
Right. Mitul, David here. Good morning. So 2021, that's a very good nuance to make and distinction between DM and EM. In terms of the carry, though, lots of people are talking about 2021, the carry is still going to be around. In terms of the funding currency, would that still be the dollar or would that be something else? And where do you then take that money into EM, looking at real rates, for example?
Right. Yeah, morning, David. I mean, I think clearly there is going to be a continued attraction to carry trade next year. In Asia, we do have, we will see, for example, the Indonesian rupiah, Indian rupee offering attractive carry, as well as a CNH to some extent. And I think that will continue to attract inflows into these currencies. And also bear in mind, it's about funding currencies. I think the dollar will increasingly be seen as an attractive funding currency. And this is one reason why we are negative on the dollar next year, just because the very low yield, the yield differentials from the U.S. and compared to a lot of EM currencies will mean the dollar could continue to remain under pressure as it's used as a funder for high-yielding EM assets. And I think it's not just Asia. We could see that in a number of emerging market currencies next year where the dollar could remain under pressure. And I think that's the nuance here, that perhaps the dollar weakness may, and this could be the surprise market, that it may not be so much against G10 currencies, but the dollar weakness could be more exhibited against EM currencies next year.
And Mitul, just to build on your earlier point, we've heard from central banks, I would say the last 2 weeks, the RBNZ has indirectly but efficiently been able to push back the concept of them or perception of them entering negative rates. The Bank of Korea, ditto, you mentioned that yesterday. China's looking to exit maybe emergency stimulus next year. Do you think that's simply isolated to those specific countries, or are we beginning to see the trend of a recovery that's coming more and more into vision here?
Well, I think if we look at Asia Pacific, then that trend is clearly there. We've seen a bottoming out of growth. We do expect recovery to strengthen in the next few months in Asia Pacific. And so it's no surprise that central banks are becoming a little bit more wary of cutting rates. We do still see some isolated rate cuts in Asia, for example, in Indonesia and India next year. And I think that will still be the case where we have to see some push for growth. But I think on aggregate, the region will probably see now less easing. I think there's certainly a move away from moving into negative rates in, for example, as you said, for New Zealand, and for some other countries, we're going to see perhaps, I wouldn't say tightening, but at least for much of next year, policy on lower for longer across this region.
And as long as we continue to see the Chinese recovery, support for commodities demand, how much more material upside is there for the Aussie, do you think?
Well, I mean, again, it's a good point. China's economy has been very resilient. It will continue to be, in our view. We think the export outlook for the region is very positive. And that does suggest the Aussie dollar will continue to remain pretty well supported. I guess the only issue is that it's rallied so significantly since its lows in late March that we may be, again, pausing for breath here. But the medium term would suggest that in an environment of likely dollar weakness, Aussie dollar, and of course, as you mentioned, a Chinese economy that's pretty resilient that will help the Australian economy continue to recover, then it does suggest potentially further more upside for Aussie dollar from here into next year. I don't think, though, we're going to see that sort of 20% plus gain that we've seen, but perhaps a much more gradual appreciation of Aussie dollar.
Mitul, a big surprise, and as a final question, since you mentioned maybe we get a cut from India next year, that recent inflation read really caught some people out by surprise recently. Do you think that's a one-off? Is that something to consider moving forward?
Well, it's been a big problem for India in terms of being able to ease policy further. Inflation has been above the RBI's target now for several months, so well above this 6% top end of its target, and that's really restrained their hand. I think ultimately, as we go into next year, inflation will ease. This will allow the RBI to ease. We think there's a very good chance that they'll ease at the February meeting, but the December meeting that's taking place next week, it seems a bit premature for the RBI to cut at that meeting. But ultimately, they need to cut rates further as inflation falls, and we think that will happen into next year.